How's it going, everyone? It's Sam. Today we are taking a look at the Fed minutes. I saw that no one had posted a video on it, and I want to cover it here for you just to make your life a little bit easier. So if you like that kind of thing, hit the subscribe button underneath the video, hit the like button so that way I know that you like this kind of video. And I will talk a bit about crypto, stocks, and also some news here in the market. So if you guys don't mind hitting the like button and subscribe button, that, like I said, helps out the channel. I do want to thank Moomoo for sponsoring this video. I'll talk more about that later, but I did get you a special offer to get some free stock. So I'll talk more about that about halfway through the video, but let's take a look at the market. So we can see here that right when the Fed minutes came out, it was 2 p.m. Eastern time, we actually saw a bit of a spike, and then we saw a drop off. We actually saw about a 1% move in the S&P 500, about 0.7 maybe, and then we're seeing it pump up now. So people are repositioning after these minutes came out. A lot of people read through them, made a quick reaction, moved over their positioning, or maybe the bots started buying right when it happened. Then obviously something that they didn't like happened, or they read something they didn't like, it fell off, and now it's back to the races. So the same thing can be said for crypto. Crypto acted in a very similar fashion, with it falling down originally, then coming back up a little bit. But surprisingly, Bitcoin's not really moving too much on this news. Now, speaking of Bitcoin, I did want to cover this just for a second before we get into the minutes here, and I'll probably cover this in a future video. JP Morgan just said that Bitcoin and crypto is now its preferred alternative asset class. Now, we know Jamie Dimon isn't really a big fan of crypto, but that doesn't mean that the people underneath him don't like crypto. They said that this is actually favored and actually surpasses real estate right now. Now, part of that might be because, hey, for example, Bitcoin's fallen, 55-60% since its high, and real estate continues to pump up in value, and we are in a ever rising rate environment, as we will see here in a second. So that might be part of the reasoning behind this, is that when interest rates rise, real estate generally falls or cools off a bit, and we've been really sold off in crypto. So maybe their timing is just because of the fact that the market's down so much. They say the past month's crypto market correction looks more like capitulation relative to last January and February, and going forward we see upside for Bitcoin and crypto markets more generally. I just wanted to cover this because it is really interesting and just came out here today. I think this is something you have to pay attention to if you're invested in crypto, or if you're not invested in crypto as well, because JP Morgan is the largest bank out there in the US. So just something really interesting to take a look at. Now, I do want to thank Moomoo real quick, and then we'll get into the minutes. Now, before we go any further, I actually have a extra bonus for you if you sign up with Moomoo. They allow you to get a lot of information right on one specific stock. You can see here, obviously, you can see quotes. There's news. I get up-to-date news on whatever stock I want to look at. Right now I'm looking at CleanSpark, one of my favorite miners. I can get detailed analysis from short sell analysis and price versus short interest, to technical indicators, whether we're overbought, oversold, fundamental indicators. I can take a look at what analysts are saying and the target price of different analysts. And one other thing is you can even take a look at the ETFs that hold it in the percent changes recently, which makes it really easy because all this stuff is in one place. So right now, if you use the link underneath the video, you can get up to 5 free stocks plus a free share of Twitter. All you have to do is deposit $2,000 or more and keep it on the platform for 30 days. Now, this is an exclusive new bonus. It's not going to be here very much longer, so I would highly suggest clicking the link underneath the video. So the Fed minutes just came out at 2 p.m. Eastern time, about half an hour before the recording of this video, and you can see it's actually a pretty long document. We have a decent amount of stuff to cover. First of all, if you look up inflation in here, 60 different examples, or 60 different places where they actually talked about inflation. So obviously inflation is what is on their mind. We also don't have any sign of stagflation or recession in this longer article. So they are trying to keep that wording out, even though that is what a lot of people are worried about. They are not hitting on it. Now, I think it is important to take a look at this specifically. This is really, I think, a summary of their thoughts. In their consideration for their appropriate stance on monetary policy, all participants concurred that the U.S. economy was very strong, very positive in a way, also negative because that means that they can kind of lean on that strength and continue to raise rates. The labor market was extremely tight, meaning really good labor market. Now that might fall a little bit because we already have seen some some hiring freezes recently in a lot of the big tech companies. And inflation was very high and well above the committee's 2% inflation objective. Against this backdrop, all participants agreed that it was appropriate to raise the target range for federal funds rate 50 basis points at this meeting. That's what we expected. We expect that in the next couple meetings as well, or the next meeting after this one as well. They further anticipated that ongoing increases in the target range for the federal funds rate would be warranted to achieve the committee's objective. Participants also agreed that it was appropriate to start reducing the size of the Federal Reserve balance sheet on June 1, as described in the plans for reducing the Federal Reserve's balance sheet that would be issued in conjunction with the post-meeting statements. You can see that they also reaffirmed their strong commitment and determination to take on the measures necessary to restore price stability. To this end, participants agreed that the committee should expeditiously move the stance of monetary policy towards a neutral posture through both increases in the target range for the federal funds rate and reductions in the size of the federal balance sheet. Most participants judged that 50 basis points increase in the target range would be appropriate at the next couple of meetings. Now, I think the reason that the market is flying up on this, or actually doing pretty well on this news, is because it's what we expected, right? We expected a couple of meetings with 50 basis point hikes, not 75 or 100 or anything like that. We also didn't hear anything about a recession or stagflation. They say the economy is really strong, so it makes us think that a lot of these companies will be able to get through this. Now, a lot of people are saying that this is similar to the 2000 crash, but the fact is, a lot of the companies that are selling off right now actually have really strong businesses. They have free cash flow. They have a lot of money on the balance sheet. They have a real moat compared to a lot of the companies in the 2000s. Now, this is also good for the cryptocurrency market, right? We didn't get rug pulled. We didn't get told that we're going to raise 75 basis points or 100 or anything like that. And if the stock market does well, Bitcoin and cryptocurrencies will typically do well as well. I just posted a video yesterday talking about when this could turn around. And we do have CPI data that comes out here in a few weeks. If we see another month where CPI went down, that would be very good news. Last month we saw it fall down from 8.5% down to 8.3%. If that continues, that'll be quite positive. Hopefully then the Fed won't have to continue to raise rates as much, because we already are seeing a softening in the job market. We already are seeing some less consumer demand, and you can see that through companies like Target that announced their earnings and they fell way short of expectations. We have companies like Snapchat that had to go and adjust because companies just aren't spending on advertising because consumers aren't buying as much. So we're already seeing some cracks in what's happening right now, and we're already seeing some cracks in the American consumer and the economy. So I think they will have to soften up. I think this is their goal. They want to scare at first, then continue to show strength in what they're going to do. And they haven't given us anything outside of the next two meetings. They haven't said what they're going to do after that as much. You would think that they would try to reaffirm that they're going to continue with 50 basis point hikes if that's what they were going to do, because they keep on saying a couple of meetings. So what I'm guessing is they will reassess, especially if CPI starts to come down, and they will start raising 25 basis points. Maybe even flip that to 0 by the end of the year and stop raising rates, maybe even lower them if needed. So that's just my opinion. I want to hear your thoughts on this underneath the video. I think this is generally a decent Fed minutes, and I think overall it is, positive. I think everyone's trying to adjust their positions now, so don't be surprised if we see more volatility. Even if the market turns down a little bit, everyone's trying to reposition after these types of events. So let me know your thoughts. I appreciate it. Check out Moo, and I'll see you in the next video.